There is little doubt that the real estate market we are experiencing currently is crazy, crazy to say the least. In one of the most challenging that I've seen in nearly 20 years. I mean, every market has its challenges. This market's got a lot of challenges. And we've been touching around several different of those challenges over the past few weeks. We've talked about supply and demand. We've talked about interest rates. We've talked about home price appreciation and affordability. We've touched on potential foreclosures and what all that could mean for the market. So this month, for my real estate market update, we're going to take a little bit of a step back and look at how did we get here? So we've talked about the effects of what we've seen, but how did we actually get here? What's driving the conditions that we're seeing today? And where are we likely to go in the year ahead? Hi, this is Andrew with the Andrew Smith team at eXp Realty. And for those of you that don't know, I mean, my team operates in North Texas, specifically Frisco and Prosper, as well as Southern California, mainly Temecula, Murrieta in the Inland Empire. And we're seeing the same type of conditions in both marketplaces. So what we're seeing is not localized. There's variations of it at a local level, and it can change from neighborhood to neighborhood, but it is something that's taking place across the country. I'm speaking to agents I work with and a business associate in Phoenix, spoke to one in Minnesota, spoke to Florida this morning, and we're all reporting the exact same thing. So let's take a look at that as we head into this month's market report. What we've been experiencing is a little bit like the perfect storm, to be honest with you. Buyer demand has been exceptionally high since the pandemic. And while it was thought that the pandemic would have a detrimental effect on housing and real estate in general, it hasn't. We actually thought buyer traffic would really take a hit and we'd have too many properties for sale. And it's actually the exact opposite that's taken place. Buyer demand has gone through the roof and the listings haven't followed. So we actually have a little bit of a short, well, not really a little bit. We've got a big shortage of property right now. But is that unexpected? And the honest answer is no. It's not completely unexpected. And I'm going to tell you why in just a second. But mortgage rates have been a huge part of that. They have been plummeting. They're down substantially. Let me move myself out of the way here. All right, so this is 30-year mortgage rates going back a year. And you can see we were at 3.7% in the beginning of January 2020. And I reported on this a couple of weeks ago that we're starting to see some bounce in the mortgage rates. And you can see that since the first week of January, rates have been increasing overall. We took a little bit of a pause in February, but they're up again to just over 3% as of now, which is still a phenomenal interest rate, but we are starting to see the impact of that. The number of new home applications has started to back away a little bit, running at about where we were a year ago after we had been just blowing through year ago levels. So they are going up, which has caused a few buyers to pull back. So mortgage rates have added to the buyer demand that resulted from COVID. And that basically came about in people that were working from home. Home got redefined. I mean, the entire concept of home is not the same as it was a year ago. Home is work. Home is school. Home is the gym. Home is entertainment. And with that in mind, a lot of people turned around and said, our current home isn't suiting all of our needs. So it caused those people to start looking for new property. And it's really fueled the demand that we have seen. So Odetta Kushi, who's the deputy chief economist at First American, kind of touched on this when she said the lack of existing homes available for sale remains the only drag on housing market potential. Many homeowners may want to upgrade, but do not for fear that they will be unable to find a home to buy, right? So we're seeing that with sellers. You've got people owning a home that's saying, yeah, we'd like to move, but there's nothing for sale. Where am I going to go? And if I sell this place, I'm going to end up worse off, right? Preventing more supply from reaching the market and exacerbating the lack of inventory. As a result, everyone stays put, and the supply of homes for sale dwindles further. So, supply, something we've touched on a lot in the last few weeks. But let's take a look at this. Let's dig into supply for just a minute. And when we think of supply in the real estate world, it's going to come from one of two places. It's either going to be existing homes that are put up for sale, or it's going to be new homes that are built. And one thing I have been saying for 10 years now is that we're undersupplied in homes in the United States. And I've had a few people roll their eyes, a few people raise eyebrows and said, no, that's not the case. But it's true, and I'm going to prove it to you. Okay, so when the market crashed, how the housing industry completely put on the brakes. But it's like making a U turn in a cruise ship or a tanker. It doesn't happen immediately, right? So, new home construction in the United States plummeted. It went way, way, way down to levels we hadn't seen in decades, not just a few years, but decades. And it can't ramp back up as quickly as we want it to. Take a look at this. This is the number of newly built homes, single family homes in the United States that have completed going all the way back to 1970. That average annual units completed line that draws across there is just over a million housing units. Okay. Take a look at 2008, 2009, 2010, 15, all the way up to 20, right? Through that time, in actual fact, there's been 13 years in a row now where we're below the average number of annual units built since going all the way back to 1970. But what's happened in that time frame? The population has continued to grow. So new home construction hasn't kept up with demand. It hasn't kept up with population growth. As a result, we are very undersupplied. Take a look around in the area where you live. Are there a lot more apartments than you used to see? Are they being built? Seems like everywhere. And then right after they're built, look in the parking lots. Are they full? They're pretty full. There's not a lot of units sitting empty. That's the need for housing. It's not that people can't afford housing, it's that there isn't any. So you've got these new homes being created or new households being created, and they don't have anywhere to go. As a result, multifamily has taken off. They've been building multifamily, but it's not just multifamily. They've been building single family units as well, but it doesn't move as fast. You got to buy the land. You've got to get all the entitlements. You've got to get the permits. You've got to do the initial development work, and all of that needs to be done before you can even consider going upright. So that's what's really happened with regards to new construction. Now, coupled with that, the other area where you can get supply in the real estate market is current homes that already exist where they're being rebuilt. So this is Frisco and Prosper, Texas, right? And this is going back 3 years. So look at the trend lines, especially since the middle of 2019. Frisco is the blue line and Prosper is the red line here. And take a look at the inventory of available homes for sale in those markets. As you can see, they're plummeting. As a matter of fact, here in Frisco, new listings month over month or month for February, latest month that it's available, new listings are down 40.3% year over year. The total number of homes for sale compared to this time last year is down 76.8%. In Prosper, new listings are down 54.8%. And the total number of homes for sale year over year is down 85.1%. As a result, there's no inventory. When I say no inventory, I mean there's nothing for sale. Ask anyone that's been looking to buy, and they'll tell you there's nothing to buy. A home comes on the market, it has multiple offers within a day or so, and it's gone. It has generally, in the real estate world, 6 months is considered a balanced market. that neither favors buyers or sellers. So, what does inventory mean? It means if no new homes were put on the market, how long would it take us to sell at the current pace of sales what's currently available? And 6 months is considered balanced. In Frisco and Prosper right now, we have 2 weeks. 2 weeks worth of inventory, meaning if no homes get listed for the next 2 weeks, there will be zero on the market. That's how tight the market is. To show you this isn't just here, Southern California, where I also work, Temecula. This is Temecula over the last 3 years. You can see that inventory ramped up through 2018, just before 2019, and then since about March of 2019, it's been plummeting. New listings, new homes coming onto the market are down 29.8%. The total month supply, total number of homes for sale, is down 49.4%, and supply is down 55%. Their inventory is faring just slightly better than North Texas at the moment, but they still have less than 1 month supply, right? So it's absolutely crazy. So you've got the perfect storm going here. You've got existing homeowners that are not putting their homes on the market as a result of COVID, economic uncertainty, and the lack of having a place to go. And you've got the new home builders that have been underbuilt for 13 years in a row now. So this market isn't going anywhere for the time being. It's not going to change as there's nothing to allow it to change unless demand suddenly stops, which again, no crystal ball, but even though interest rates are just above 3%, they're not expected to go much above 3.2, 3.3% for the rest of this year, assuming everything keeps moving the way it is. So it should be no surprise then that when you have limited supply, as you have here, what happens to prices? Demand is high, supply is low, prices go up. Well, the final numbers for 2020 just came out. And you can see there's a little bit of variation depending on which study you're looked at. There's the Case-Shiller Index, the CoreLogic, and the Federal Housing Finance Agency. So you look at there, it's right around 10%. This is national. So when you look at these national numbers, you can see that home price appreciation nationally has been right around 10%. But again, if we look locally, here's Frisco and Prosper. Again, Frisco is blue, Prosper is red. And you can see what the average or the median sales price has done over the last 3 years. You're in Frisco, you're 365 back in January of 2018 to just about 500,000 now. Prosper during that same period in time around 425 to now it's actually over 600. Look at the huge jump we just had in January. That's the last blip in that chart you see right there. You can see it jumped up substantially from January to February. It goes up and down, up and down, up and down, but you can easily see what the overall trend is here. Okay, it's not much different in Southern California. Here's your median sales price average going back 3 years for the Temecula market. Again, right around 440 back in January of 2018 to approaching 600,000 now. So when we look at it year over year, though, not just month over month, year over year, prices in Frisco and Prosper are up about 15% year over year. Temecula here was up about 19% year over year. So what does this mean going forward? Well, it's not expected that home prices are going to fall. So if there's any of you out there thinking that I'm going to wait, I'm just not going to do anything right now, I'm going to wait until this market cools down, there will be an opportunity cost to waiting. Again, the right time for you to do something is when it's the right time for you to do something, but don't try and time the market. Unless something unforeseen happens, if interest rates go up, your purchasing power goes down. So put that in perspective, if rates were to rise 1%, so let's say from 2.5% to 3.5%, your purchasing power declines approximately 10%. So that means if you got pre-approved at 2.5% for a $500,000 home, if these rates go to 3.5%, you can now only afford $450,000. That's how this works. So there's going to be an opportunity cost for waiting. Right here, you've got, when you look at all of these price forecasts, it's showing that, again, this is national, almost 6% is what they're forecasting home prices nationally to appreciate this year. In both Temecula, Frisco, and Prosper, I expect that we may see appreciation a little bit lower than we did last year, but it will certainly probably be above the 6% level. If you're looking to sell, what should you do? Well, there are ways to overcome the challenge of ending up homeless. And I'm happy to talk to you more about that if you've got specific questions with regards to that. But most sellers are looking to sell for the highest possible price in the shortest amount of time. Based on the inventory, right now, the chances of selling for the highest possible price are there, as well as the shortest amount of time. More homes are expected to come onto the market as this year moves forward. They are expected. Will it actually happen? Possibly. I mean, we saw an uptick in listings from January to February, only to see those listings get sucked up, very quickly in February. But again, it really depends if you're a homeowner thinking of selling, what you're planning on doing. You know, while it's appreciating, why should you sell? Well, if you're moving up into a home that's bigger than the one you're in now, that home's also going up. So the gap between your house and that house will continue to increase. If you're downsizing, then it could be a different story. You may want to wait just a little bit, right? Because at that point in time, the home that you're moving into, the smaller house, when you look at it relative, right, it's appreciating, but you're probably appreciating just a little bit faster. If home prices go up 10% and you're in a $700,000 house looking to buy a $400,000 house, that spread just again continues. So it really depends on everyone's unique situation. So if there's anything I can do to help you, please feel free. I've got a link below where you can schedule a call. I'm happy to talk through your specific situation, help you put together the plan that's right for you. But the idea that there's something strange going on, or that this is just there aren't market dynamics driving this, as you can see, that's not true at all. It's absolutely supply and demand and market dynamics that are driving what we are seeing in the marketplace right now. So hopefully you found this helpful. Please go ahead, hit that like button. I'd really appreciate it. And if you want to get notified every time I put out a new video and updates, go ahead and subscribe to this channel.